Hello, my name is Andrew Masters, an analyst from FIBO Group. In this video, we'll talk about the types of candlestick patterns, particularly the single candlestick ones. The candlestick analysis is quite simple. The patterns are divided into single candlestick, double candlestick, and triple candlestick. Single candlestick patterns are those formed with one candlestick only. Corresponding 2 and 3 candlesticks are required to form double and triple candlestick patterns. All candlestick patterns can be conventional, divided into the strong and the weak ones. Strong patterns allow interpreting the direction of the price movement and setting the pending orders with high probability. It means that as soon as they appear, we can enter the market immediately. Weak patterns require additional confirmation in order to open the position. In other words, this pattern is not sufficient for us to definitely interpret the situation. It's not clear until the price goes further or turns back. We need to wait for at least one more candlestick confirmation to decide whether it's worth entering the market. There's a lot of single candlestick and other patterns. For example, a shooting star hammer, inverted hammer, hangman, dragonfly, gravestone, and many others. They're also divided into the strong and the weak ones. It's only important to understand the principle. If the candlestick shadow goes beyond the previous price range and then returns to the same range, it means that the price has reached a certain barrier and it is not able to overcome it. Those are strong candlestick patterns, after which the market reversal is likely to happen and it will go in the opposite direction. And those are the same candlesticks, but their tails are in the middle of the price range. And the competition itself takes place within it, and they're already weak. Their appearance does not guarantee the price reversal and that we can open a position in the direction opposite to the price movement. As we've already mentioned, when a weak candlestick pattern appears, we should wait for the confirmation candlestick and only then make a decision about position opening. You will find a great number of literature on this subject, and you will learn that these patterns have different names. Single candlestick pattern, pin bars, one-day reversals, extreme of the first order, spikes. This does not change their nature. They're all strong candlestick patterns, after which you can enter the market with peace of mind. But prior to that, you should set all pending orders. Let me remind you that these candlestick patterns are valuable only at the top or the bottom of the market, or near the significant levels. It is this that the top of the market, then we should set the pending order for the opening of a short position 5 points below the candlestick low, regardless of the time frame. A conservative variant of a stop setting is to place a stop loss at a distance of 5 points from the top of the pin bar. Now this level works as a resistance stop loss. An entry order is placed 5 pips from the extreme because the price is sometimes a bit beyond the maximum and minimum, which we can adversely affect the trading. During the next lesson, we'll learn about double candlestick patterns. Stay with us.